Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, July 3rd, 2023. Before I click through the charts, just want to encourage you to please click like, subscribe, share the content if you would with friends and colleagues, and also check out wickedstocks.com where we provide daily and weekly analysis and a full suite of analytical videos, including daily triple Q and daily SPY analysis, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 month near term investor. Always looking for 20% moves on those underlying stocks. Check out wickedstocks.com. Everything I just described to you is in a single subscription package, and you get a 5-day free trial at the very onset of your subscription. So you can bail after 4 or 5 days if you don't like what you see. Check out wickedstocks.com. So, Monday's daily Tesla report. Let's click through the charts. I will start with this one. This is a weekly chart. So we settled about 2, 4, 5 weeks ago above this 197.24 18-month descending channel top that indicated our first target was a 2 to 3 month objective that we reached in about 3 or 4 weeks, presently at the 280.85 rising channel top. This is considered midterm resistance, but over time, the settlement above the 197.24 channel top should yield ultimately a retest of the 414.49 all-time high. I don't know by the end of the year. I'll get to that in a moment. But over the months to follow, over the months ahead, I do think a V-shaped rally is in the making following the settlement above 194.32, that long-term channel top. And, if we can close this week, for instance, above 280.85, that would allow that 414.49 all-time high well, I'm going to say by the end of the year, and it probably would be sooner, probably within 3 to 5 months of closing above 280.85, would we then anticipate 414.49. But until then, the market is susceptible to falling back. It's perfectly normal for this market to rotate back into the 180s, 190s over the next couple of months and still wind up rotating upward once again to new pullback highs as we move into the fourth quarter. So there's that. And that is a big picture. That's just a repeat of what I've been saying now for the last few weeks. Let's jump to the daily chart. This is kind of our 2 to 3 week outlook. The same channel top that I showed you a moment ago at 280.85 is 279.52 on the daily chart. We may actually see that this week. I'll get to that in a moment. But overall, the 2 to 3 week outlook is still susceptible below 279.52 to falling back to 226.93. We're about a week and a half, 2 weeks into that as it is right now. Will we see 226.93 this week? I doubt it. But I will say there is that mid-band structure that you can see here, 249.70 to 251.48. Mid-band parallels off of these lows. We did slip below it a week ago, came right back above it. It is a 2-star support, able to contain selling into later week, possibly through the week, and above which the market is free to rally to 279.52 by the end of the week. On the way up today, I have 265.35, and if you go back to that weekly chart, we have a long-term descending 2/3 speed line at 265.35 all week long. It can contain daily buying pressures, and if we close today above 265.35, we should reach this 280.85 formation by Friday's close, and that's where I say, we could actually reach this 279.52 to 280.85 region within, 3 to 5 days or less, 3 days, several days perhaps, of closing above 265.35. Until then, 265.35 can contain daily buying pressures. And, we could actually fall off from here back into the upper 240s, lower 250s again within several days of testing 265.35. So working our way down today, 258.15 can contain intraday weakness, above which 265.35 is in reach today. If we break today or open below 258.18, we could unravel all the way back into the 249.70 to 251.48 region, where we can bottom out into later week and turn higher again back to 265.35 within several days. Once again, upside pushing or opening today above 265.35 does allow 271.52 intraday, while closing today above 265.35 signals the 279.52 formation within 3 to 5 days. Let's just call it by Friday's close. That is part of a range on the weekly chart up to 280.85 that can contain buying through July, and yes, still below which the market susceptible. There's no clear sell signal at play, but susceptible to unwinding all the way back into the 190s over the next couple of months. On the other hand, if we close the week Friday above 280.85, that 414.49 high, I could draw a straight line across, and you could certainly imagine that if we close above 280.85, we are 3 to 5 months away from retesting that 414.49 high. So that is sort of the big picture. Let's work our way down today, that if we do happen to close below 249.70, that pivots the market south. I think we've got a good high for the week, and we should continue falling into that 226.93 area. Now, that 249.70 is right about here. I don't have that shown on this chart, but it's right about here. And if we were to close today below 249.70, with that kind of reversal volatility that would occur on a Monday, yes, we could certainly, by Friday's close, test 226.93. 226.93, rising one-third speed line, projected off that January low, able to contain at least weekly selling pressures, quite possibly through July, and we could rotate back into the upper 280s. We're sort of in between these two important points, upper 270s, mid 220s. Those are the big picture levels as we move into later July. And so we've got 265.35 and 249.70 inside of that zone, but it really is, if we were to test 279.52 this week, and you're an options trader and you play both sides of the market, you may reach for 227, 230 out of the money puts that don't expire for at least a month. Inversely, if we fall to 226.93 and you're a 2 to 3 week options trader, you could then reach for 280 out of the money calls that don't expire for at least a month. I would go several months out. Obviously, they're more expensive the further you go out, but you get more bang for your buck in terms of delta, and you're less susceptible to the time decay element. It would be a settlement, and it's not going to happen this week, but if over the next few weeks we close below 226.93, that we would then anticipate that 185.52 to 194.32 region narrowing gradually. That would become a 2 to 3 week objective if we were to close over the next week or two below 226.93. So that would be inside that 2 months that I've been mentioning. We're about a week and a half into testing 279.52, and I've been mentioning all along that we could fall back into the 190s. I don't have that label down here, but we could fall back into the 190s within 2 months of testing it. And so if over the next couple of weeks we close below 226.93, we could by the end of July actually test that longer term support in the mid 180s to lower 190s, 194.32, 185.52. This area here would become a 2 to 3 week objective if we settle below 226.93. You know, I don't know if there's really anything else that needs to be said. Anything I say beyond this is repetitious. I'm going to leave it at that for Monday's Tesla report. Please click like, share, subscribe, and check out wickedstocks.com.